Hello everybody, hope they are good. Quick Bitcoin update for today. So far we are still inside this range. These are your range highs, these are your range lows. Okay, here you have your mid range, and these are your range quarters. Okay, and so we are still in this structure at the highs because if you zoom out, you can see that we are at the highs. Okay, now what you have to try to figure out is what's more likely: the price breaks out above the range highs or below the range lows. Okay, I'll tell you what I think. I want to go through the chart in a minute. I think that if we go into the 1 hour time frame, we can get some more information. Okay, and the thing that I don't like in this chart is that if you notice, every time that there are we're at the highs, we see some kind of large green candle or a long wick, and then price gets rejected straight away. You can see here, large green candle, price gets rejected. Okay, again, if we go through, you have here a couple of large green candles, price gets rejected. A wick, price gets rejected. Okay, we continue. Another large green candle, price gets rejected. A wick, price gets rejected. Okay, we continue, no problem. Here more large green candles. Okay, price gets rejected. Again, large green candle, price gets rejected. And we can continue all the time like this. Okay, so what is that telling you? Well, I think in my opinion, that's telling me that the market maker is building their shorts. Okay, and they're building the shorts at the highest zones in this range. All right, now if you go into the 4 hour time frame, we can see here that we took a deviation above the range highs. Okay, now the question is, was that deviation enough? We're gonna go in a minute through high block capital because yes, there is still quite a lot of liquidity here at 31,700 zone. Okay, so it makes you think why they hit 31,500. Why? For $200 difference. Okay, this is the difference. Why did they even hit this level here and hit all those liquidations before dropping price? Well, usually when that happens, it's because the market maker is trying to build more liquidity in this zone. Okay, yes, because if you don't hit all those liquidations and then you are moving in this zone, then anybody that is short in here with high leverage is going to have their liquidations in this zone. Okay, so at the end, if you had here, let's say 1 billion worth of liquidations, now here maybe you have 2. All right, of course that's an example. Don't take those numbers because I was just making them up, but that's what I mean. So at 31,700, I know that there is quite a lot of liquidity here. Okay, now if you notice here, we've had this first tap, the second tap. Now the question is it possible that we have another tap to the upside, maybe up all the way here to 31,700, hit all those liquidations, and then price can drop below this range? Okay, because yeah, here you have a lot of inefficiencies in the chart. Look at this. Okay, all these large candles are inefficiencies. They are liquidity pools that have to get retraced. Okay, so that's what it's telling me, that the scenario that I'm favoring at the moment is a breakout below this range. Okay, possibly another deviation. Now if we don't get that deviation, I think we will. Okay, but if we don't get the deviation at 31,700, then there is still an interesting zone in the chart, because if I look at this chart, I think that catches my eye the most is this wick over here. Okay, let me mark it for you. This could be the 100% of the wick. It's actually at 31,500. Okay, round number, the same round number as here, 29,500. Okay, that's not a coincidence, guys. That's pretty interesting, in fact. But then you have here, okay, the 50% of the wick here, that it's around here, 31,175. Okay, that's the 50% of the wick. Now the wick filler strategy says that at least the 50% of the wick has to get filled. Okay, now yesterday we made an attempt to the upside, but we didn't really get to the 50% of the wick. You can see here. Okay, there we got to $31,045 kind of. Okay, so this one here is not taking yet. Okay, again, that we hit 31,175 doesn't mean that from here we have to dump. Okay, they can still go for, the 100% of the week, or even this deviation here. But the week fill strategy says that at least the 50% of the week has to get filled. That's what we know. So, if you are looking into longs, then this should be your take profits, okay? Where you take profits, the most of your position. But we have a problem, and it's that we have tomorrow the CPI data, okay? So what I think is that today, it's very likely that we range in this zone, we do some kind of sideways move, okay? And nothing really happens, okay? I think that the big move is going to happen tomorrow, usually the day before CPI data or, or FOMC. They like to, move price sideways. They like to wait until the data comes out, okay? So that's what I think for today. Otherwise, now, how could you have taken advantage of this move to the upside yesterday? Well, to be honest, it wasn't that difficult. When I go here, 4-hour 50 MA, okay? Now we can see that we are currently above the 4-hour 50 MA. So as long as we are above this level, I think we're fine. The problem is that we are, right below the mid-range, so we are right now here. But if tomorrow wasn't CPI day, then today, as soon as I saw a close of a candle above the mid-range, tested a support, then, long, very confident towards the week. But the problem is what I've told you, that tomorrow is CPI, so it's likely that, we do some sideways until tomorrow, and then tomorrow we'll see what happens. Because tomorrow, we're in a market driven by data mainly, so the data is going to make a difference of what's going to happen tomorrow in terms of price action. Now, yesterday, how could you take advantage of this move? Well, I was telling you one of the scenarios was in CPI data that we see a deviation here. Oh, sorry, I don't want this. Here, a deviation below the range lows. If you see tomorrow a deviation below range lows, okay, then that could be an opportunity to long as soon as we can get back into the range, okay? That's one idea. But the other idea that I was telling yesterday was, a push up, a retrace into the mid-range or the 50 MA in the 4-hour time frame, and then long, okay? That was one of the scenarios. This happened yesterday. Well, they didn't retest the 4-hour 50 MA, but if you go into the 1-hour time frame, okay, you gotta see how they tested the mid-range very clearly here, okay? Check that out. That's the perfect, resistance support flip, and then that's when you can long, okay, to the next target. Now, the problem is that tomorrow we have CPI, okay? So we're expecting sideways move today, but if we didn't have CPI tomorrow, then what I would tell you guys is that, we are right now above the 4-hour 50 MA. We're testing a support. All this time it has been resistance here, you can see, and it has been pushing price down. But now we're above it, okay? Yes, we are below the mid-range, but the difference in price is, less than $100. So I would tell you that it's very likely that price would eventually come above the mid-range, and then that's when, price would go for this liquidity pool here, for example, okay? And of course, towards this week here, the 50%, even the 100%, and even this liquidation zone at 31,700. So I would tell you, if tomorrow wasn't CPI day, I would tell you the chart is looking good for longs. I'm gonna favor longs. That's what I would tell you. But today, I cannot tell you that because we have CPI tomorrow. So today, I think it could be a bad day for day traders, if I'm honest with you. I don't think that we are going to see much going on. But, if you're a scalper and you go into the 5 minutes time frame, 1 minute time frame, I'm sure you can find some opportunities. Now, we're going to go into high block capital. We're going to try to spot where the liquidity is, okay? But, in advance, I can tell you that the chart is telling me that the liquidity is to the upside, okay? What in high block capital, okay? These are the liquidation levels. So far, you can see that, there were a lot of shorts at risk because you can see a lot of short liquidations, okay? Then, price did this short squeeze, stopped all those shorts, and now the delta is, pretty much back to 1, okay? So, it's quite neutral at the moment. But If you check at the right of the chart and you check for these spikes, you can see that the spikes, the highest amount of liquidity are to the upside. You got here a 30,671, 177 million worth of short liquidations that are in a times 50 leverage, okay? That's a lot of liquidity, but obviously you have more spikes to the upside. Check this out. Sorry, that would be, I think, hang on, what am I? Here. There you go. 31,273. I think that's around the wick that I was mentioning, guys, and even higher. Okay, another spike. What is this? 31,000. Hang on, here. 31,869. This could be the deviation that we're talking about. Okay, so you can see how these three spikes matches with, or logic behind the chart. Now, we're gonna go into the liquidation heat map. We can see here more visual. Okay, 12 hours time frame. It's probably not much telling me because we're in a sideways move. Yep, exactly. Not much in there. Now, if we go into the 7 days time frame, I'm sure we can find some more things here. Okay. Yep. Check this out. The brightest bar, it's at 31,350. Okay. That's pretty much the wick that I was telling you about, guys. Okay. So you can see that they're building a lot of liquidations above that zone. In fact, to the downside, we still have some liquidity, but I like this zone better, okay? And of course, if you go into the 1 month time frame, it's going to be even clearer. So let's check this out. But here, you're gonna see what I was talking about, guys. All right, check this out. We already had here at 31,700 a lot of liquidity, okay? We had a lot of liquidity here. And what is interesting is that they hit 31,500, but they didn't, spike a bit further to hit this liquidation. So that's what it's telling me, that what they tried to do here is to increase the liquidations here. So when price comes back to it and hit them, they're gonna hit even more liquidity, okay? And they're gonna do it in a more efficient way. So that's what I'm telling you, guys. The liquidity at the moment, in my opinion, is to the upside. At least 31,700, 31,800, and from there, if we see a rejection, get back inside the range, that's a perfect swing short opportunity. Okay, where to? Well, I will be targeting then a breakout below range lows. Okay, and I'm telling you that would be 29k, 28,500. That's possible. Okay. That's what I think. I know a lot of people are screaming for 32k, 40k, 50k, 60k, but I don't care about those, about those targets. I'm only caring what's gonna happen in the next, 1-2 days. That's all I care about. So for now, I would favor liquidity to the upside to get taken first, and then a potential deviation above the range highs and a breakout below the range lows. Finally, okay. The problem is, again, tomorrow we have CPI, so expect for today some kind of sideways move, and then tomorrow see what the data is. The previous CPI data was 4%. They're expecting a 3.1%. So let's see what the actual data comes out, okay? Before I finish the video, let me say thank you for all the support to the website. The course is getting fully booked pretty quickly. You have here both groups of August have been fully booked. The first group of September fully booked, and now we have only one group for September and 2 groups for October. But there isn't to get booked. For example, the first group of October, there is only 9 places in stock. Okay, so if you are interested in booking the course, of course, first go through the website. You have here some questions and answers. Here you have the course details, what you're gonna learn, and then also you have a description here, okay? So thank you so much, guys, for watching the video, and I'll see you soon.